Hello traders, Gary Wagner here. Just about 10:20 in Honolulu, 4:20 in New York. It is Monday, July 25th, 2016, and we are looking at the Dow Jones Industrial Average under moderate pressure today, closing off about 77 points at 18,493, low 452, so we're not that far, about 50 points off the low, and the high was 555 on the day. S&P also trading lower when you compare the 0.42% drawdown in the Dow Jones Industrials. You can see that the S&P has not closed down nearly as much, only off about 0.25%, 5.25 points lower at 2162, with a low of 2155.75 and a high of 2172.50. There's absolutely no doubt, as was told in an old Stephen Stills song, there's certainly something happening here, and what it is not exactly clear. What I mean by that is we have had this market trade to lower points, actually for the second time now in the last week. We absolutely also see a ceiling or some sort of resistance that has formed in the market near these highs, which are at around 2170. That, of course, is vis-a-vis the E-mini. And so we have some real resistance in the market. We also have some strong fundamental data that will be coming out as we have a Fed meeting scheduled this month. We have the Bank of Japan coming out with something on Friday. So we do have fundamental data that could certainly influence the market. But as of right now, I do believe that we're seeing the first signs of this market not so much being top heavy, but pre-consolidation period. This could simply be a consolidating period, as we've seen so many times in the past. Really, to point that out, we want to, of course, compress this chart, but there have been protracted periods in which the market really hit a top and was able to trade above it. Now, you would get small corrections within that, and really the overlying characteristics, therefore, would be that that market was trading in a defined range-bound manner. In all of the recent occasions that it has traded range-bound, meaning, in a defined range, when it did break that range, as you can see right here, it broke to the downside, and on other occasions it broke to the downside. So in terms of a historical perspective, we could be certainly on the doorsteps of our first correction since hitting these new record highs. But I think that the interesting market to look at today is crude oil. As you know, I have been on record for over this last month believing that we would see oil drift to lower prices, and the prices that I was looking for was a range between $42 per ounce, $44 per barrel and $42 per barrel. That would be these two red lines here. We have, without a question of a doubt, broke and closed right within that area. As you can see, oil down about 2.5% today at 43.06, putting it down or off $1.13 per barrel. My sense is that let's see how it acts in this market. I think it has a ways to go. As I said, I'm looking at these tops right in here on a technical basis is that area that it could in fact find support. But traders, even if it does, I'm not really expecting a big bounce to the upside. Rather, I am looking for the market through these summer months to try to trade in a sideways pattern, moving through this range between 42 and 44. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.